So this is the S&P 500 chart. Here is the weekly pattern. Now, I'll take you through the analysis one more time as we look at the bigger picture in here. And you can see in the bottom there are harmonics. Those are the energies in the market. And generally, when there are energies that are all rising and pointing upward, as you see right over here, you get the biggest impulses to the upside. When they're all pointing downward, as you see right over here, you get the biggest impulses to the downside. So where are we right now? Well, we're kind of in a choppy area, as you see right over here, as the market made a peak right there, looking back in October, and then come up here and just tickled out that high. So where are we now? Well, we're in a range, and we're towards the top of that range right now. Now with the market here getting into the beginning of the year, I'm going to show you the daily pattern. It's really set up for higher prices. Now, we could see, again, a lot of waffling here early in the year, which is somewhat common. But then it looks to me, looking at momentum conditions, as you see the reversal scalp right in here, and the fact that we are early in these rising phases says to me there's a fairly good chance that we're going to see upside in the market. Now, if you're a level 2, 3, or 4, you saw my analysis for the projections for next year. And in there, I talk about the potential highs that we could get to early in the year, and then what I think is going to be some severe volatility. So you need to watch that video. So these upside projections over here, I really think minimally that's 7,100. Right over there is 7,300. And there's a number on the monthly chart up around 7,440 that are all possibilities earlier in the year. That is, unless we see some kind of a breakdown that we get a warning that something is changing. Right now, we don't see that. The warning, if anything, is that the market is still rising and likely to move to the upside once we get past this year-end digestion. So let's look at the daily chart right over here, and this is what we're looking at, that you can see these rhythms in here. Now, these are at an average of about 26 days here when you look at this chart. And you can see the rhythms as the cycle lines are put in here up top. And the actual cycle rhythms ideally right over here. And generally you get the troughs plus or minus a few bars of the ideal. And you can see that pretty much happened all through here. Now, we had looked at this decline and said, well, that's too early. It's just not likely that that's going to be the trough of this cycle, and that if it rallied again, it would probably pull back again. And we talked about the fact that December was likely not going to be a good month for the market. There were periods in there we were going to see selling, and of course, we did see that happen. So now you could see where we are is we're in this ideal troughing or bottoming phase right there. And we had asked the question, is there one more dip? Or was the trough completed? And this is really that one more dip right over there. It's a little more dramatic when you look at that on the Russell. And, you know, the holiday markets, again, do make it a little tough to call. But based on the timing of the ideal rhythms that we're looking at, it's very likely that what's going to happen in here is that this will then resolve itself to making this trough in here. Either it's already made or will be made in the next couple of days, and then begin to move up and head towards these resistance areas. That's the previous high, then this area right up over here where we start to get some fib extensions. This is what it looks like right over there. Now, as long as we keep making these positive formations, the market's going to be in good shape. Now, if it turned out to be a negative formation, let's say the bottom was set in here, it tried to rally, and then what happened was it kind of failed in here and then turned down and then broke below that low, well, that would be warning us of a top. If it got below this level right over here, which that low is at 6603, I'm just going to draw that line all the way across right over here. If it got below that level, that would warn us that a top is in place, and the year is going to have a lot of trouble based on that. So right now, what we're looking at is the most likely is that there will be a upward phase that will come out, take out the 69.45 area, and even get up higher in here into the 71s, and tracking an upward course that probably takes it up to 73 or 7400 in the next couple of months, based on the length of time we expect the weekly cycle to be moving up. So you have this range here, that's that 69.45 area. You have the bottom of the range here at 65.2192. Those are the numbers I just showed you on the daily chart. Breaking out of the range is positive on the upside. Breaking down under this level at 65.2192 is very bad. So this is pretty good if it breaks out on the upside, and very bad if it breaks out on the downside. And that is because if it breaks to the downside, it will tell us that this has turned over already. That could only happen if the even longer term patterns that are out on the monthly then are pushing to the downside. That would be a very negative occurrence. Right now, we can only speak to the positive side because momentum is strong here. The cycle formation is extremely strong on that structure. And this cycle formation is very strong also. Based on that structure, this is the option bias indicator right there. And that is telling you that the option positions in the indexes should be biased to the long side. Look at here at the slim ribbon PO. You see that arrow? That is warning you that momentum is likely to resume on the upside. Look at where it did it here and here and here and here, all of those perfectly, and that says you must at least be thinking about long side bias when you look at this momentum. Regardless of what I believe is going to happen for the year or for coming months, right now, for trading purposes, this is all speaking to us in a way that is positive. And that's very, very clear. I gave you the numbers that break it down. And here, looking at the weekly chart, we'll just make that very clear. This is positive over 69.45. This is negative under 65.22. Those are the key big numbers. Right now, the bias is to the long side. Let's take a look now as we go over to our website. And we're going to go into our market condition monitor, which is what I like to look at this stage. And see, I have this set to intermediate right over there in trader mode. So there's another mode in here which just gives you a look at the time frames right over here. This will break it down into the different time frames. This is now on the 2-hour time frame, and you can see that it's negative. If I go back to the trader and I move here to the intermediate, you can see what we're looking at here are bullish to neutral conditions, though the SPY is very bullish. QQQ is bullish, DIA is bullish, and IWM is neutral. And of course, that has had the worst time of it here. And you could see that the reversal scout on the shorter term is red, and on the slim ribbon, it's neutral. And our algorithms then take all of that and it digests it into telling us, for the different time frames, for the different trader types, what the conditions are. If I go to the short term right over here, you can see where we are is neutral to slightly bearish. So this is a result of the conditions that have existed here for this last, few weeks, and especially these last days where the market has struggled here in December. And you can see SPY is neutral, so it's still the best of the four. And you get slightly bearish readings here for QQQ, IWM, and DIA. So if you use our market condition monitor and you want to know when these things get to a place where they're in better shape, you want to have it alert you. We have an alert system. You can download it from our website. And let's say on the SPY, that I want to get notified. I click notified, and I want to get notified when it is goes to bullish here or slightly bullish, because I want to know when these things are improving, because I kind of want to be bullish. So I put that in there, and that information is now set up for me on the QQQ. Let's go back here. And on QQQ, I'm going to click notify, and I'm going to, again, make this slightly bullish. and I'm going to want to know when, have it notify me on the alert system when it becomes slightly bullish. And you can do that on all of those. You can actually do it on, if you're a level 3 or 4 member, you get this app. You can do it on all the stocks that we have listed in here. And let's just look at the short-term conditions for trade setups now coming into the beginning of the year. Let's just look at like the top 10 that are very bullish. You could see those all right in there, which are in the very bullish category. And again, you can get notified when they deteriorate. Just set it to, neutral or something like that, and then you'll know when they've lost this upward momentum. The ones that are very bearish, you could see those right over here. As I go down the list, and you can set it up again so that it will notify you when, let's say, they become neutral and you want to know when they're improving, then it will notify there, you can see. So those are the stocks going down that are very bearish, and that's a look at the very, very valuable and very interesting application that we have that's called the Market Conditions Monitor. Again, this is for level 3 and 4 members. The only difference is that level 4 members includes the intraday right over there, and level 3 members, generally, if they're not interested in intraday, then, they're better off with the level 3. So that's a look at the market conditions